I was able to engage with a larger pool of investors, oftentimes had more access to decision makers because there just was that ability to be able to meet.
Our vision is a holistic one based on the belief that the strength and competitiveness of our economy ultimately depends on giving everyone the opportunity to participate and contribute. Let's not leave anyone on the sidelines.
Start Engine is one of the leading equity crowdfunding platforms in the industry.
So there's another half, about $3.5 billion that essentially needs to come from the private sector. And a lot of that will come from entrepreneurs like the audience in this meeting. So there's that one big issue, demand issue.
Equity, as you all know, is dilutive, and it's at a valuation which is at today's valuation, which might be low for a company that's very early stage. And so if there's a way of avoiding the dilution of equity, that's always desirable.
So most of our startups that are raising from VC are also raising on Republic. And I think that's the incredible part of it, is that you can be raising from two different sources at the same time.
For us, certainly based on our background, there's an intersection. I like to describe it. Founders found, storytellers raised, right? And so how you blend those two things, I think, is going to be a very important marker for your ability to stay in the game.
I would say fintech is so big now, everything can have a fintech component, and therefore fintech firms are in some ways more similar to generalist firms than they are to
if you're investing at the early stage, you need to believe there's a $500 million, billion, multi-billion dollar possible exit. Even though it might be unlikely, you have to believe that it could be possible. But if the idea is maximum exit value is 100 million, that may be great to bootstrap and the founder should go pursue it, but it's not really venture fundable in my view.